In this video, we are going to be analysing SoFi. If you want your own stock analysed, throw that in the comments. We'll get round to it when we can. Now, to get straight into it, we're sitting around $6.50. We're up about 8.5% on the day. What are going to be key levels from this area here? So what we will do is pull up standard deviation channel charts. On the left, we have a 6-month chart. On the right, we have a 1-year chart. Now, what are going to be these key resistances? So we can see we've actually hit into basically two today. One's where we basically opened and one where we've kind of just hit now. And this is 628 and 650 or 660. So we can see intraday chart again, we kind of opened here. Bit of hesitation, we kind of pulled back, tested it as a support again, came into here. This is where we got that pullback, broke over, came back to test it as a support. We held, we got that bounce, and again now we're kind of struggling. Pull back to VWAP, come back to retest it, and again now we're retesting it now. So if we fail this VWAP retest, most likely going to continue down. 628 is going to be that intraday target. Now what if we're looking at it from a longer term time frame? So again, back to that same chart. If we continue higher, which is ideally where we can go, because this is where I'll probably try and catch the moves, and that's going to be 710 to 730. Now what this is the second deviation between the 6-month and the 1-year chart. Now what we can see on the 6-month, we are uptrending. On the 1 year, we are downtrending. Now this is always a bit of a concern because the two terms aren't matching up. So when I see this again, I'm reducing size because the longer term trend is down, that more recent trend is up. So until that kind of clears up and they kind of start trending in the same direction, again, I am going to be reducing size. But coming into this 711 area, this is really where I'm starting to look at it short bias. And again, as we're still downtrending on that 1 year, looking to hit that short bias, what I'll probably do is short the shares, buy calls to define that risk. So again, if we pull back, we can make money. If it ends up going against us, again, we have a defined risk going into that trade, so we know exactly what we're going to lose. So that's the main trade plan. If we did continue higher, we then have $7.95 and $8.10. These are our third deviations between the 6-month and the 1 year. Now this is going to be my main trading opportunity. If we can come up to here, really looking at it short bias, because if you understand standard deviation, you know that 99.7% of data should be within the 3 standard deviation channels or 3 standard deviations. So in this case, once we're coming into this range, again, from a statistical standpoint, only 0.3% of data should trade outside of this range. Again, nothing in the stock market is going to be that accurate, but again, it's usually just a good indication that if we start to break this area, that will probably be short-lived and we'll start breaking below it quite quickly. And again, that's where I really like to get those, short the shares, define the risk, or again, we can do some sort of other option strategy, potentially like a vertical spread, or just buying outright puts. It just depends on the premiums. But yeah, if we start breaking this area, again, if I'm long, I'm really not holding any shares past this level because that's extremely overbought. And again, really then just switching that overall bias, really heading short bias from that level or below. Now, if we start pulling back from this current level, what are key levels to be paying attention to from a support side? So obviously we did already note today the 628. Again, be watching for that. If we fail that VWAP, we start to pull back. But as well, if we come lower, we have 585 to 540. Now this is key. This is between our statistical mean between the 6-month and the 1 year. Statistical mean is essentially fair value. So when we're within this range, it's not an area you usually want to be trading. Because again, if we're trading, we're waiting for some sort of move, and from this move, it's kind of a gamble. So unless you're potentially playing a straddle out of this area, again, there's usually not a great risk to reward. But as well, if you are an investor, you're looking to invest in SoFi, then getting in at this level or below is where you want to be buying. Really, I would never, if I'm investing, I'm never buying above that fair value area. Now, if we can continue even lower, then we're looking at 510 support, we're looking at a 460 and a 435. So again, they're all supports on the way down. My main focus on SoFi though is, again, market's probably going to turn more bearish after this week. We just had the job opening jobs out today. Market took that as bad news, more than expected. And then what's happening is around 7 p.m. tonight Eastern Standard Time, we have or should have the confirmation of the debt ceiling. Once the debt ceiling is confirmed, that's no longer a worry. We may start to see the overall market start to pull back. And if so, we want these stocks which are at their highs or at their second, third deviations to look at them short buy. So if SoFi can pop up to this kind of move, to me that is a short bias location, and ideally that's where I want to be trading it from. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.